Okay, what's up, guys? Good evening to everyone. Today we really have a lot to talk based on what has been happening on the market, the price actions, and everything. We all know price action this week has not really been the best, but yeah, the market is still moving, people still make money from the market, and that's it. So, today, I'm gonna be showing you guys how you can combine SMT and CRT. So, as you all know, SMC is a good strategy, but combining SMC and CRT will make your trading really good because that's you combining ranges and also combining other blocks, supply and demand, all those things. So now, when we want to talk about ranging, you know, CRT stands for candle range theory, and as a CRT trader that I am, I trade based on ranges. So today I would like us to look at BTC and I also like us to look at other pairs since as the market was soon open. So now looking at BTC, if we are supposed to go to our higher time frame, so I'll take BTC, let's go to the monthly time frame, which we always, our top-down analysis, one of the best approach in the market always. So based on our top-down analysis, what will you understand? You're gonna see that we have been in an uptrend on BTC, right? And now on BTC, the supply SMC traders, supply and demand traders, you all know, we're gonna be looking at break of structures, price breaking structures to the upside, like this, and we have an order block slipping here. We have an order block slipping here that price is reacting inside. But now, as a CRT trader that I am, I don't trade based on order blocks or supply and demand, but I trade based on candles. And now, when you trade based on candles, you just look the overall trend. But now I want to see what is happening between the previous ranges. So as a CRT trader here, we had a range high, we had a CRT here, we had a range high, and we had a range low here, and you had this sell from here to here, this CRT. You have a 3 candle CRT. So I will mark this out as a CRT trader. I'm gonna mark this out, and I'm gonna be looking at this area as my next draw on liquidity all the way down here as my next draw on liquidity, because as you all know, there is a lot of liquidity sleeping here, a lot of accumulation, and this place here will be a valid area where the market can tap in and give us a pullback. So going now straight to the weekly time frame, if we are to go to the weekly time frame, we are going to understand that on the weekly time frame we have a close below, showing that what we have more push to the downside on BTC. We are seeing BTC to push more to the downside, and this area now reacts like a breaker block. This area reacts as a breaker block, and then we had this fair value gap here where price came and took out the liquidity. We had this area here which was a fair value gap, price took out the liquidity, and we have now more push to the downside. Now from here, where am I going to? I will be going straightly to the 4 hours time frame. Now on my 4 hours time frame, why do I choose to come to my 4-hour time frame directly? Why did I not go to the daily? Why did I not go to check what the daily have? So as you all can see, this was the move we had based on our CRT, from the CRT high to CRT low, and now this low now is a breaker block. And you all know breaker blocks are also valid key levels in the market that we also look at what is happening. But now there's something here we have to actually talk about, because a lot of people don't know what we call SMT derivation. So there are most of the times whereby you will mark a key level. Let me say this is a key level you have marked, and you are expecting price to maybe come in and take this key level, give you that liquidity sweep before giving you the dump to the downside. But price will just come to that key level, and price will not actually take out that key level. Price might come and do something like this without tapping that your key level you have marked. Now all of the two are correct. This is correct, this is correct, Price has not taken out that liquidity that you're expecting, or tapping your key level you're expecting, and price dump. But now what you are supposed to understand in this is we have what we call an SMC diversion. So, and that's why you see when analyzing the market, you analyze the market with the correlated pairs. Now, what is the correlated pairs of BTC? That's where we have the Ethereum. But after this, we are going to look at the Ethereum. For now, I want us to look at the BTC and why are we selling the BTC right now. What's making us to sell BTC? That's what we are looking at right here. And after this, we are going to look at what Ethereum is doing to see if the sell on the BTC is confirmed. So now you understand, as a range trader, that's why I say I always talk of, you need to understand what ranging is, because we are range traders. So as a range trader, I am trading this 4-hour range. And why am I trading this 4-hour range? Because I have seen price. I have seen price tap this level. Some people will say, oh, price have come and close above. You have a close above, why are you selling? But what the price did, when price came up here, price closed, but price gave us kind of a double top and pushed to the downside. After this, you know, as a trader, you need to be patient to see what price is doing. So where why are you supposed to be looking at maybe areas of interest around the second open candle opening? Because this first one, you want to see how the candle is going to close. The candle closed back within the range, telling you that this range is valid. So now you are taking yourself from this range, targeting this low. So now we are going to go straight to the 15 minutes to see how we could approach this trade. And based on the 15-minute time frame, you will understand that how am I to approach this trade. This is now how you will approach the trade based on the range you are trading. Based on the range now, you saw this close above, this is your entry. You will have an entry here, stop loss slightly above, and you are targeting the range low down here. This is how you are trading, or entry needs to look like. And if you never took this entry up here, you will still have another entry here, market structure shift. You still see here you have market structure shift here, price pullback, and you still have another entry here, and target the low, stop loss slightly above, and you will still have this. But now I want to take you down to, also we go to Ethereum and see what Ethereum is doing to see if that sell was actually valid, because you don't just trade blindly, you trade what the chart shows you. So now here we are going to go straightly to the monthly, because we have to do our top down analysis to know what has been happening. And now there is something I would like to show you guys on this chart to confirm to you guys something. So here, as you all can see on this chart here, we had the CRT sleeping here. We had this CRT, so I'm gonna start by taking out all the lines. And here we had the same CRT sleeping here, and we had this low sleeping here. But now there's something I also want us to understand based on the SMC explanation I was giving. As you all can see, this was a fair value gap sleeping here, and what the price did, price never tapped in. Price came, but price never tapped on the fair value gap, and you see price pushing to the downside. But now let's go back to BTC. Let's go back to BTC, and so you can understand what I was saying. On BTC, you see BTC took out its fair value gap. BTC tapped on the fair value gap, but Ethereum never tapped. You see, that's a tech USD. Never tap on the fair value gap. That's why you see sometimes you might mark a key level and price doesn't respect that key level, and you see price dumping or going to your direction, and you'll be like, I marked the wrong the wrong liquidity. Sorry, that was because you never use the correlated pairs to know why this market never tap on my key level. So now, after marking this out, I'll just go to the daily. No need going to the weekly, we'll just come to the daily to just see what is happening. From the daily, we go to the 4 hours, and then we just go straight into business. So as you all can see, This is the daily time frame here, and we had price respecting the breaker also. You see, price tap on the breaker block, which was this area here, because price has broken this low. Sorry, let me put it, which was this low. So price still the same thing. Price never tapped, price never respected that breaker. But what happened? BTC respected its own. You get? So now we go straight to our 4 hour time frame. We go straight to the 4 hour time frame. And now on this 4 hour time frame, this is where everything get really technical. On this 4 hour time frame now, what range am I trading? What range am I trading? I am looking at this range. You have this range here, which is this range high here. This is the range I am interested in trading. I am trading this range. As you all can see, we have this range, and we have again an internal range. So we have two ranges, and we have again this internal range up here, and we have this internal range. So now you have these two ranges. So now which range am I looking at? I am looking at this internal range. Why am I looking at this internal range? Why am I trading this range? Because price collected liquidity from this range low, but price has not collected liquidity from this range high, showing that there is a high probability that price might just do this, take this liquidity and push back all the way up to collect this liquidity slipping up here, because this is a valid order block. So now let's go, let's sorry, let's take this out, and now let's go to our 15 minutes to look at what is happening on the 15 minutes and how you could secure some entries on your 15 minutes. So now, based on your 15 minutes, you have so many entries we could take, because we had price giving you lower lows, lower lows, lower lows all the way here. But now if you wanted to wait for a valid confirmation, this could be our valid confirmation. So 4 hours, let's go back to the 4 hours, and this could be now a good confirmation for you to take your sell. So yeah, you could just mark this area here. You could mark this candle. You can mark this first candle, this first 4 hours candle, as it closed below. Yeah, we have rejection, liquidity sweep, close below 1 hour time frame. You're gonna see a good entry. You have a good entry here, sell here, TP down here, stop loss slightly above here. That's it. You have something like this and you're good to go. Less stress, less of everything. So that's how you can combine your CRT and SMC. But now what I really want to show you guys is something completely different. So I'm really gonna need a blank space for us to really talk about this. You all know the market moves in highs and lows, and highs and accumulation, not just highs, lows, also highs and accumulation. But now I want to talk about there's something I really want us to talk about, which is also going to help a lot of traders in the market. Now, let me take for example, you as a trader, you see the market, for example, giving you something like this, and okay, you are like, yeah, that market has changed structure. I can see my break of structure here. I can see price, using fair value gap or supply zone here. Price is about to go down. But now, there's one thing about so many traders. There will be traders where they will take this sell from this area, and they'll be like, I want to hold this trade all the way to this low. Not like it's a bad thing though. You can hold your trade in as long as you know what you are doing. You are free to hold your trade. But now, the psychology now of so many traders are not yet strong, because this market will always respect all of this demand that we're sleeping down here, all of these demand zones that we're sleeping down here. Even if the market needs to sell all the way to the low as predicted, let me say you are expecting the market to sell all the way to this low. Even if this market needs to sell all the way to this low, each time this market reach a demand, this market must do a pullback either to a breaker block and target the next demand, and do again a pullback to the breaker and target the next demand, all the way until it reaches this your key level, right? But now, sorry guys, was checking my trades on BTC. But now, what what happened to so many traders? So many traders now, they don't really understand that there are so many errors we make as traders in the market. Because what am I saying? That market can still respect that, but now you fail to understand that each of these zones are also supply zones. So each of these zones, for example, you have a supply zone sleeping up here as well. You have, you know, price will come down, tap in this supply, come again down. Immediately price reaches this area where this order block is sleeping, price can still come back to this same supply before giving you the next move all the way down here. Now, what happened? Many traders now, when price tap on these key levels and be retracing back to their entry, they will go and close the trade because they are scared that the market might do otherwise. That is why, as a trader, you need to learn how to know when to go out of the market, so that you don't see profit and then the next minute, boom, everything is gone, you are on losses or you have hit SL because maybe you have put your break even, or the market comes back and take you out and stuff like that. Because if the market respect a fair value gap here, there's still a there's still an order block sleeping up here. Yeah, it might respect this fair value gap, there's still other block sleeping up here. So what if the market decide that, okay, I want to come and respect this other block before giving you the next leg to the downside? You're already out of the market because the market has taken you out and you have the other block sleeping at this key level. So most traders, we have to understand that when you have lows like this, these lows are not for anything. These lows are for you to collect profits. That's the essence of everything I am explaining. Immediately the market gives you a pull down, collect your profit from this low and wait for a second leg, and you can still re-enter the market and target where you are targeting depending on the key level the market respect. But now you need to focus on that on the higher time frame, not on the lower time frame. So let me look for a chart that is a little bit clean. Okay, let me take for example crude oil. Let me take for example, this is crude oil. I had a prediction of crude oil reaching 60k, okay, and 80k, sorry, reaching 80k, and this is a trade we are still holding. But now I really want to explain something about this crude oil that I really want other traders to understand. So now when we this is the chart, we are downtrend. When this market gave this pull to the downside, you had this area that has broken structure here. This area had broken structure here, right? Now look at where the market pulled back. The market pulled back all the way to this fair value gap. You had this pull to this fair value gap here before this market pull again down to the downside and gave us again where this break of structure here. But before this pull down here, what happened? The market sold down. You have this low 1, you have this low here 2, then you have now this low which is the final low, right? I'll switch to the 4 hours time frame so you can better understand what I am talking about. Now, based on this 4-hour time frame, after the market came back and collected this fair value gap and pushed to the downside, this was the initial low you will be looking at to take your profit. This low down here, this low down here will have this break of structure is the initial low, right? But now immediately the market tap here. For example, you have entered your sell, here, stop loss up there, you are targeting this low down here. Very nice setup. But you see, when this market gave this move, this pullback that was coming to this 4-hour fair value gap here, I will tell you for free that so many traders ran and closed their trades. I will tell you for free that so many traders ran and closed their trade because of what? Fear. This is the 4-hour fair value gap. Imagine you took your trade here or here. Let me say for example, you took your trade in this key level. Entry confirmation. You took your trade here. Stop loss above this high. And then this market came down like this all the way to this area. And then the market left your entry, came down all the way here, and started giving you this retracement. So many traders closed their trade because it's already around their entry. But what happened? It came back, tap at this level, came, giving you more inducement that, okay, I've done pullback. People are expecting the market to continue buying. What happened? The market dumb. So most of the time, always learn how to collect partials in the market. Always learn how to collect partials. Partials are very important because you might be in profit 1 minute and the next minute you are in losses. Not that your bias is wrong or anything, but just because you are not patient. Because if you are patient enough as a trader, if you have that patient enough, you have to understand that this was the real entry of the market. If you were patient enough to see entry confirmations, you will see that immediately the market tapped its fair value gap. Like me, I never took the trade at that level. I waited for the market to give me structure shift, displacement, and I took my second entry because I have an initial entry up here. I'm holding to 80k, but I took now my second entry from this fair value gap here, targeting this low down here, and this is what I was looking at. And then my stop loss was just above the fair value gap. So this is how my trade was looking. This is how my trade looked like. As easy as that. This one, you hold your trade and you're 100% comfortable with what you are doing. So you don't panic, you don't fear, you hold your trade, and you don't really have that, like, pullbacks or stuff or whatsoever. But yeah, we are going to leave this for today. I'm not actually feeling well, that's why I don't really post more often. But yeah, I just decided to show you guys one or two things. So do it to subscribe, like, comment, and immediately I get much better, we will have more analysis coming up. So guys, cheers.